funds rate, the overnight rate is above 4%. That's very expensive. They just said they're now in Q3 expect to borrow over $1 trillion. Can you imagine having to pay 4+% to borrow $1 trillion? That's a really big bill that you have to finance. That's a lot of money. And so for those two reasons, the United States is literally financing itself on a quarter-over-quarter basis. Talk about living paycheck by paycheck. What's the nation state equivalent of living paycheck to paycheck? The nation state equivalence is we have to borrow about $500 billion a quarter. The United States has already come out and said we will borrow and we will have a little over $2 trillion deficit this year. So our run rate is, call it $500 billion a quarter. Okay. And delaying our $500 billion because we can't get the rate that we want and because there are not natural lenders to us anymore. Now, how do we know this, guys? Because we can look at the market. So this is the U.S. government 10-year yield. And this is, now it's choppy, obviously, but you can see in the beginning of Q2, it was low. And now it is higher. So yields rose. That means bonds fell. That means demand for debt was shrinking. And this is despite an artificially scarce supply. We took debt issuance out of the market. We did not dump more debt onto the market. And yields still rose. Bonds still fell.